Well, good morning, everybody. I'm Tony Margatelli, Chairman at ICPA. This is a recording of the webinar that we put out on the 10th of February, and all the information contained therein was accurate at the time. If you're looking at this webinar after the budget in March 17, bear in mind some things may have changed and something depending on timing. All the polls that we took during the course of the webinar will be displayed and the results will be put up at the end, so you don't have to watch us going through. I hope you enjoy this and pick up as much information about making tax digital as possible. Thank you. Well, good morning, everybody. I'm Tony Margatelli, Chairman at ICPA. May I say, first of all, well done to each and every one of you for surviving yet another 31st of January filing deadline, which I hope passed by without too much trauma and too much lost sleep. Interesting, chatting with members up and down the country, the consensus seems to have been that it was somewhat tougher this year than last year, which is not good when you think about the possibility of 4 quarterly filings a year and a year-end compliance to contend with, is it? Don't actually know how many of you filed tax returns for your clients on the last possible day, namely 31st January. But you were in good company, weren't you, as HMRC themselves were unable, or maybe they were just unwilling, to issue their responses to the consultations until the very same last day possible. Now, one could call that brinksmanship, couldn't we? Or just simply annoying. But hey, nice to see that HMRC view a deadline as a target to aim for, which is what I think they accuse taxpayers of that file in January, isn't it? Anyway, moving on. Today I've got my colleague Michael Wilson assisting me in delivering this webinar, so if anything goes wrong tech-wise, it's all down to him, yeah? Seriously, the whole team here at ICPA have been working very hard to make sense of HMRC's outpourings and have helped me to pull this webinar and future webinar presentations together. And if they're all listening downstairs, which I'm sure they are, thanks to each and every one of them, and now get back to your work, yeah? Now, I'd like to make a couple of housekeeping points early on. There will be a few polls during this presentation. Can I ask that you answer them as quickly as possible, as we do have an awful lot to cover in this webinar. Those of you who are familiar with attending webinars will be used to the control panel on the right of your screen, especially the section towards the bottom where you can enter questions or comments. So if you're new to webinars, have a quick look at the control panel to familiarise yourself now. Regarding questions, as I said, there's a lot to cover, but please, if you do have a question, fire it over, and if I don't get to answer it during this webinar, I'll respond to you individually as soon as I can. And if after the webinar you come up with a question that you think, oh, I wish I'd asked Tony, feel free to email me at Tony, that's Tony, at icpa.org.uk. That's Tony at icpa.org.uk. As Chairman of ICPA, I'd like to mention that membership of the ICPA has risen to 957 practices, which encompasses over 1,200 individual accounts. It's something we are really proud of, and we're pushing for that 1,000 barrier. We've got over 30+ member benefits, from free professional indemnity cover to free software to free helplines to free CPE, as well as significant saving on numerous small practice specific software and products. So, excuse me, if you're an ICPA member, can I ask that you keep your eyes open for our email alerts on new benefit additions, and also check the website at regular intervals just to be sure you haven't missed any. And finally, if you're not a member, do have a look at the website. It's www.icpa.org.uk. That's www.icpa.org.uk, and basically see what you're missing out on. Now, as the title suggests, I'll be looking at what lies ahead for us as accountants and our clients now that HMRC have published the responses to the 6 consultations issued in August 2016 on making tax digital for business. Now, it was back in December 15 when, out of the blue, the then Financial Secretary to the Treasury, David Gauke, announced, I just looked at the screen here and I can see that picture of David Gauke, and I think maybe next time, Michael, we can get one where he tries to look happy. Anyway, during this Parliament, he announced HMRC will make fundamental changes to the way the tax system works, transforming tax administration so it's more effective, more efficient and easier for taxpayers. What's not to like, people? He added, unnecessary time delays are eliminated. Love it to death. The tax system operates more closely to real time, keeping everyone up to date and removing the risk of missed deadlines, unnecessary penalties, debts arising, and errors in the system being carried forward from 1 year to the next. I can feel you're all warming to this, aren't you? Then he added, taxpayers will have access to digital accounts with the information HMRC needs automatically uploaded, bringing an end to the tax return. Hence the headlines, the death of the tax return. Now, we knew that HMRC had been allocated a stonking 1.3 billion budget for this project, and yet, think about it, 1.3 billion budget, and yet it still took an astonishing 8 months to August 2016 to issue the 6 consultations, which would lay down the guidelines for the single biggest change in our accountants' working systems since inception of self-assessment. Just think about that. If they're going to get this thing up and running, starting from April 18, it took them all 8 months just to get the consultations. Not a great start, you think. Anyway, so what did we learn from the original consultations? Well, we learned the timetable was rolled out, and here it was. From April 18, sole traders, landlords and partnerships were to be first to be reporting their profits on a quarterly basis. From April 19, VAT would be reported from within digital software, not via the gateway. Now that's caused a lot of concern and questions, actually. What it means is that you, as it says there, you cannot come out of your software and complete your VAT return via the gateway. Apparently, significant numbers of businesses do this. I don't know why, but apparently significant numbers do it. I believe it's something to do with altering the figures at the bottom part of the VAT return. But that's got to stop because obviously they want to get rid of the gateway. So from April 19, you've got to remain within your software and file your VAT return from within the software. And again, from 2020, our limited companies join in all the fun. Do remember, if you've got a limited company that's not digitally ready, don't think you've got till 2020 because that's just the quarterly reporting. Remember, from April 19, limited companies are included in having to file their VAT from within digital software. So maybe you haven't got as much time as you thought you had, yeah? Anyway, moving on, we learned that exemptions were proposed for the very smallest business whose turnover was below £10,000. No idea whatsoever where that figure came from, none whatsoever. There was apparently no room for spreadsheet users. Free software was going to be available. There'd be a penalty regime, points make prizes. That cash accounting was seen as some sort of universal panacea for small businesses and landlords. That taxpayers wanted to make voluntary payments on account and to engage with HMRC in a digital way. That all businesses would save £400 by dealing with their taxes this way. That internet access was not a major problem across the country. And astonishingly, we would spend 60% less time to comply with our tax obligations under this new system. Finally, the sting in the tail, sadly, 2% of taxpayers would no longer use an accountant. Hopefully they're not my class. Now, I may have missed some of these points, but I think I've covered most of the important ones. Now, post-August 2016, it's fair to say, I think, that accountants everywhere viewed these proposals with some scepticism. Actually businesses as well. And for me, the best summary was by Chris McLeod in Cumberland, who succinctly said the proposals were bonkers. Absolutely bonkers. That's what he said, and I haven't found it. It makes sense to me. Anyway, major concerns were raised by all the institutes and organisations, including the ICPA, about the proposed timescale. The lack of detailed information, the exclusion of duly appointed agents from their class online tax accounts, the availability of free software, the refusal to acknowledge the use of spreadsheets, the ability of HMRC to provide a secure platform, the lack of dialogue and information for businesses generally, and the mandatory nature of the proposals, to mention just a few. Thinking about those, and I may have missed a few of them there, but I think that's most of the concerns. Just think about the lack of information for businesses generally. Just compare the output we've all been used to seeing about auto-enrolment or workplace pensions, and then compare how much we've seen about making tax digital. Need I say more? Then, on the eve of HMRC's published responses, the House of Commons Treasury Committee on Making Tax Digital issued its report, which quoted, amongst others, the ICAW saying, and I quote, "The current timetable for implementing Making Tax Digital is unrealistic. This undue haste is not in the best interests of taxpayers." No shocks there. "While we support the move to digital, it will take at least 5 years to do this properly." Well, that's what they said. Regarding the timetable, the committee themselves said simply, "This looks over-ambitious." They also said, "It's extremely unlikely that the vast majority of business will be capable of adapting to that start date at reasonable cost, nor should they be expected to do so. The committee therefore recommends a delay of the full implementation of Making Tax Digital until 2019-20. Now, but if that's bad enough, they then added, "In the view of the committee, a start date of April 18 for mandatory Making Tax Digital is wholly unrealistic." Their words, wholly unrealistic. Whether a start date of 2019 for 1920 tax year would be possible, excuse me, will depend on the exact shape of the government's proposals. These have yet to be published, but on the evidence that the committee has seen so far, this also looks unlikely. Now, if you get a chance, do read their report. It's fairly damning, and what's been interesting is the lack of actual detailed response from HMRC to it. Anyway, moving on. So, with mounting pressure on the proposals, we waited for HMRC's studied responses to be published, didn't we? Then we waited, and we waited, and finally, midday on the 31st of January, like some errant taxpayer, they were published, leaving HMRC's Making Tax Digital Director of Business, Teresa Middleton, to say, it's a wonderful title, HMRC's Making Tax Digital Director of Business, to say, "We've listened to those responses and they've been instrumental in shaping the detail of what we're announcing today." So, were our concerns addressed? Were they actually listened to? Well, first of all, let's look at the issues that are still to be decided on or are awaiting further deliberations before a decision is actually made. So these are things we still don't know about. First up, the turnover exemption from the requirement to keep digital records. As we know, as I said earlier on, HMRC set it at 10,000 in the original consultations and asked for observations. Many people observed, where did you get that figure from? But anyway, they asked for observations, and it came, I think, as a shock to no one, except apparently HMRC, that this amount, being below even the basic personal allowance, engendered lots of criticism from respondents, with the result being that HMRC have decided to grasp the nettle and do nothing and think about it some more. So they're still thinking about the appropriate level, and we can expect an answer by July 2017. Although I have heard rumours that possibly it will be in the March budget, but I don't know. They're saying maybe July 17th. Will it be the VAT threshold? Will it be the cash counting threshold? Or will it be somewhere in between? Or will it stay at 10,000? And how much consideration is actually being given to the numbers that will be exempted in relation to the 1.3 billion budget? You know what I mean. Moving on, in the original consultation, HMRC were considering a 1-year deferment, weren't they, from the mandatory start of Making Tax Digital for certain businesses based on a set turnover, with the intention of giving the very smallest business more time to get ready. However, with the delay in the responses, their delay, and the exemption level still not established, this is also being reviewed. Again, we can expect an answer by around July 17th. In the original consultations, it queried whether the government should bear some of the costs of making tax digital in the light of the mandatory nature of the proposals. Unsurprisingly, HMRC have said that they're going to consider the options available. I wonder what they are. And that we're going to have to wait until later in the year. Frankly, not much has been made of this, which surprises me somewhat. I mean, I know we at the ICPA push that compensation should be paid to every single taxpayer. But, as I say, not much has been made of that, but you can rest assured that we have been pushing for compensation, and we'll see what we can do. Next, consultations in relation to incorporated business have still not materialised, have they? Again, they're apparently set for later this year. So we'll have to go through this whole process again for our limited company clients, and I wonder whether they're going to issue that in January, yeah? But maybe I've just been a bit facetious. Moving on. The simplification of base period rules and eliminating overlap profits will hope for improvements that could have been made, which again are going to be considered further. Yeah, I did hope that they'd sort this out. We've got clients with overlap profits hanging around for forever, which are losing value as time goes on, and they could have sorted it out at this point, but no, they're going to look at that again. The whole penalty regime, remember, points make prizes, the whole penalty regime, both for late submission and late payment, is still undecided, and we're going to apparently have another consultation in the spring. So that's still up for grabs. Spreadsheets, this is big news, will apparently be permitted, except there's a big proviso that they must be making tax digital for business compatible. What that means we don't know, and would have to be attached to some as yet unseen free-to-use software before being sent to HMRC. Again, we're waiting for detailed information on how this is going to work, apparently coming out of spring 17. I wonder how much work is going to be required in amending client spreadsheets, and how are the nudges and the prompts going to be incorporated. All to be seen, and I don't think this supposed breakthrough is really going to work. So, having listened to that, you decide, were our concerns actually listened to? You know what I think. Now, what was not changed was the headline timetable, and it seems, subject to possible exemption and deferment, sole traders, landlords, subcontractors and partnerships, excluding those partners with a turnover of 10 million plus, yeah, excluding those, they drop back to 2020, yeah, will start reporting their profits quarterly with effect from the first accounting period beginning after 5th April 2018. So, for instance, if you've got a 31st August year end, they start reporting quarterly from 1st to September 2018 and so on. They're going to have 1 month to make the update, and at the year end, a compliance update will have to be made, which has to be filed by the following 31st January as at present. And of course, in between time, you can do compliance if you're able to do it. Now, let's not be under no illusions. There will be penalties for late filing and for late payment, as well as late payment interest, after a new 12-month soft landing period, which they're going to give us, which is similar to that they announced for RTO. Remember that? And if you remember it, you'll also remember that the 12-month soft landing period actually ran for about 3 years, didn't it? Because that software took that long to get anywhere right. And in fact, many of you will probably say it's not working correctly at the moment. But they're going to give us a 12-month soft landing. And if you want to bet on it, I think it will be a lot longer. Now, as regards to supposed free software, please remember, this was only to be free for, as HMRC call them, straightforward taxpayers, which means they have defined straightforward taxpayers as they're not VAT registered, they're not limited companies, and they're not employers. What they mean by that, obviously, is the free software will have no VAT functionality, obviously it's no use for corporates, and it will not have any payroll or PAYE functionality. Now, not sure I like that term, straightforward taxpayers. I mean, in accounting in practice for many years, probably too many to remember, and I don't think I ever found anyone who was straightforward. If you thought someone was straightforward, it bites your leg later on, doesn't it? I just don't like that term, straightforward. From the outset, remember, this free software has only ever been envisaged as being free for the end user, namely the taxpayer. Never was it, nor is it intended to be available for an accountant. Yeah, the free software is only for the end user. We will not get access to their software, to that free software. Important to remember that. So, with due regard to the awaited exemption levels and the deferment possibilities, it looks like our smallest clients will be reporting their profits quarterly from April 18. Like it or not. So how are they going to cope? And how are we as accountants going to help them, given the 1 month post-quarter end reporting deadline with all that entails? Can we operate as we do now, calling in the receipts, analysing whatever's provided, albeit on paper or on a spreadsheet or on a Sage printout, whatever, get answers to the questions that we have, enter all these transactions into a digital format for our clients? No. Can we, in the time available, expect to turn large numbers of our clients into accomplished bookkeepers? Obviously we can't. Do we really want to replicate what happens every January 4 times a year? And that's ignoring the year-end compliance. No. But equally, do we want our clients to be responsible for their own quarterly filing, believing and in many cases knowing full well that they're going to get in a dreadful mess? Obviously not. So we're going to have to come up with a new one. It's not our fault. That's something you need to remember when you're talking to your clients. This is none of our doing. It's not our fault, but there has to be changes made going forward. It's going to have to. Now I'm looking at these changes. As an accountant in practice, I am, having been involved with this through my position within the ICPA and working with the tax strategy group at HMRC, I've been trialing lots of things on my own client base, and these are things that I've come up with that I think will apply to us all. I'm proposed to break down our clients into 4 client types. Please, please, please remember, I'm ignoring corporate clients, yeah? We don't know about them yet, so I'm ignoring corporate. So I'm breaking down our other clients into 4 types, and these are they. First up, larger clients. Who are they? These are clients that have and use their own software for their accounting. Whether they do the owners themselves do the accounting, or their staff, or even by our staff down at their premises. They're VAT registered, preparing and filing their own VAT returns, and they already provide us with their accounts at their year end in some form of digital format. You know, we get Sage printouts or we get the Sage disk or whatever. These clients, they're used to a quarterly regime as a result of their VAT registration, and they already used to and presumably are happy with using the accounting package of their choice. Now, for these clients, the journey to digital utopia should be relatively straightforward, as long as the software they use is fully supported. By that, we all know we've all got clients who have not paid up upgrade support costs because they say nothing's changed in their business, the software is working perfectly adequately, and they could be umpteen years behind. Well, if they're not fully updated, there could be cost to bring them update because they want to add the extra function of sending it to the revenue. Also, the software is making tax digital compatible, by which means they're going to have the ability to actually transmit the final results to the revenue, and it's up to date. As I say, again, if the software hasn't been updated for many years, there could well be a hidden cost when they try to bring it up to date before they're given the final bit to be able to send it. There could even be a few that are actually using illegal software copies, and there have been all sorts of problems going forward, aren't there? Now, for these larger clients, it would be advantageous to us if they could ensure that we as their accountants are allowed access to their software, enabling us to review their quarter's results off-site, preferably with the ability to make any necessary amendments before we make the final submissions on their behalf. If the software they use is in the cloud, it should be easy to achieve, shouldn't it? If it's not, we're going to have to work on how we can get regular updates, enabling us to provide any adjusting and correcting entries. Now, for those clients, we should be able to ensure that they meet their Making Tax Digital for Business obligations with the least disruption, shouldn't we? Now, the next batch of clients I want to talk to you about, bear with me, a quick slide here. Yes, the next batch of clients I want to talk to you about are those that we already undertake in-house bookkeeping for via the likes of, you know, the usual suspects, Sage, QuickBooks, Xero, ClearBooks, Cashflow, Prelude, etc. Yeah? And we're doing this all mostly in the cloud now, aren't we? As we already undertake the bookkeeping using, well, I imagine everyone's using bank feeds now as much as possible to cut down the time involved, digital nirvana should be easily achieved via the addition of the quarterly update procedure, which will inevitably follow from these types of providers. Yeah. Now we come to the 2 types of clients that are causing people up and down the country the most concern. Namely, the first bunch, who are VAT registered, but have happily been keeping manual books or using a spreadsheet for their accounting and have filed their VAT returns themselves via the gateway. Now, I'm going to be bold and declare that I have little faith in HMRC's outpourings regarding spreadsheets. The mere fact that they originally discounted them as a vehicle for record keeping makes me doubt HMRC's sudden road to Damascus conversion. I also doubt very much that my clients who use them and design their own spreadsheets are going to be happy to amend the way they work and accept alterations to their model. Just as importantly, I don't want to become their tech support when they encounter problems modifying them to fit the final proposal. And let's not forget, being unable to review them in real time is a major drawback. So I'll be looking to get these clients over to a new system as if they were maintaining manual records. Each one of you will have to make your own decision regarding your spreadsheet users, but I'm going to treat them as if they're manual and wean them off their spreadsheets. Now, how are we going to do this without teaching them bookkeeping? Well, the answer is, of course, we can't. We don't want to get involved in that. But we can offer them a cloud-based bookkeeping system, which, with the addition of direct bank feeds, will result in us being able to offer them a first-class service involving them in spending less time than they do at the moment. I've done this, I've tried this, I've moved people over, and it does work. They do spend less time. It will enable us to handle their quarterly VAT updates, their quarterly tax updates, and their annual accounts preparation and compliance update. Just let them deal with the invoicing, and via your bank fees, take control of the rest of it, and they will save time, and we will be able to do it. Now, finally, we now come to our clients that fit the HMRC description of a straightforward client, namely non-VAT registered, non-corporate, and non-employer. Now, some could call them our basic clients, our bottom-end clients. Those that each year, you know who they are. They bring their records in either in a box or with a little notebook, or a notebook and some sheets of paper, or just a bag of goodies, which we then have to trawl through, and usually they bring this to us, don't they, December and January. Now, how are we going to get them to keep accounting records that will be fit for purpose, that we can control, that's what's important, and that they will both understand and feel comfortable with, whilst keeping them away from the blandishments of the supposed free software? The answer is not obvious, because these are our lowest paying clients, and the cost to use our in-house bookkeeping package, etc., which would work if we could get them to use a bank account for the bulk of their business, and most of them won't, you know that, will most likely be prohibited with it. And they're not VAT registered, remember, so it's a bit like a sledgehammer to crack a nut. So what are we going to do for these clients? Well, the answer has in part been provided by the revenue, but with a twist in the tail. At its simplest, we get our clients to use an app. Now, come on, stay with me, people, stay with me. We get our clients to use an app to take a picture of their receipt. This is all being done so that they don't have to do any sort of accounting, yeah? All they do is take a picture of their receipt for petrol, materials, whatever, and then allocate that expense to the relevant account, i.e. motor expenses, which then updates their records accordingly. This is how HMRC see the free software working, as we've seen on their YouTube channel, etc. Then, at the end of each quarter, the results are sent via the app to HMRC, basically at the press of a button. Now, income can be either pictures of invoices issued or simply the input of a daily takings value. Now, whilst this will work for the unrepresented taxpayers, it will be little or no use to us as accountants, will it? As we ain't going to get access. We're not going to get access to that free software. We won't be in control of the uploading. We won't be in control of the information that's being sent to HMRC, which puts us on the back foot, which we most definitely don't want for obvious reasons. Now, here is how I see new software or apps being made available that will permit us as accountants to provide the app to our most basic clients, as we call them. But the big difference is that we can track what they're doing via control panel, dashboard, screen, whatever you call it, whereby we're able to monitor their entries, make amendments, which we can then notify them about, say, you know, that's motor expense, that's not private, or it's not a motor car. right? We can do that, we can make the amends, we can tell them about them, we can handle allocation of entries that they've informed us that they don't know what to do and they've left it for us to do, yeah? This will keep us as accountants at the forefront of our clients' thoughts, give us control over their input, and enable us in real time to be responsible for the quarterly updates. We'll send the quarterly updates, yeah, and the year-end compliance. More importantly, without them having to understand anything at all about bookkeeping and tax. Now, this is a model I see app developers and software houses looking to use for accountants who want to retain clients in this sector. Now, let me tell you, on behalf of the ICPA, I'm devoting as much time as possible to help our long-term supporters, My Firms Act, develop this model to make it function in the way that I've outlined and ensure that what we need as accountants is made possible. Now, if you're not sure, if you want to have a look at how easy this will be for these straightforward bottom-end basic clients, as we know, non-VAT registered, non-employers, yeah, then have a look, download the ICPA app, yeah, which you can get on both versions, Android and iOS. Have a look at two of the tools you've got there, Income Tracker and Receipt Manager. This will give you a flavour of what I've been talking about. I've given this to my clients and it functions. It functioned this year, it worked for this year. Now, it's not going to work exactly the same way there as it does there, but it will give you an idea of how easy it is for them to take a picture. They won't have to email us this information. It will be available via our control panel dashboard, that sort of thing. But it will give you an idea of how it's meant to work. Now, if you want to keep up to date with this work on the development of the app, just tell me, Tony, send me an email, tony@icpa.org.uk, say that you want to be kept updated, and I'll do exactly that. I'll keep you updated as to how we're moving along and what's happening with the system as we're producing it. Now, with these systems in place, and having already trialled it within my practice, I can see from the evidence that I am going to be able to accommodate my clients, including those with no appetite for bookkeeping. I'm going to be able to meet the quarterly update timescales, and frankly, I'll be able to provide a better service for the smaller clients than I am at the moment, simply because I'm not looking at information that's like 2 years out of date, yeah? So, as some accountants are saying, their VAT registered clients can't possibly handle an accounting package. Remember, as I said, as I've explained, they won't have to, will they? For their straightforward clients, if they've got straightforward clients who can't handle an app, then surely these accounts are going to have their work cut out, aren't they, every 4 months to get them to file their quarterly updates, aren't they? They're going to have a huge amount of work to do. Maybe if people genuinely are finding that clients genuinely cannot handle this digital involvement, then they really need to think about getting them to apply for an exemption on the grounds of being their inability to engage digitally. Yeah. Now, at the ICPA, we're committed to helping our members as much as possible and making tax digital become clearer in the coming months. Let's not forget, we've still got to wait for them consultations on our corporate clients to come, haven't we? Whoopie-doo. Now, we're going to be putting on more webinars in the coming months. Myself and the fabulous Mark Perdue of Thomson Reuters will be presenting on this in person at the Practice Evolution conferences. They're in June, the 15th of June, I think it is, in London, and on the September 21st in Manchester. Please check out the website, www.practiceevolution, or one word, practiceevolution.co.uk. Don't forget, I'll also be presenting at Cantex 2017, so maybe I'll see you there. I'll be at branch meetings throughout the year. Check the old website for information, yeah? Finally, just a couple of questions before we finish. I've got a question here from George, who said, can you run through the bottom end clients? Yes, how it works for the most basic of clients. As I said, what's basically going to happen is I envisage that they will be able to simply take a picture of the expense, allocate that expense to an account heading, which will automatically update the figures We will, via some form of control panel, go in, be able to look, monitor, check, see what they're doing, put everything right, wrong, move things around, take control of it. Very simply, we can even look at it and go, oh look, you haven't put any income in for 5 weeks. Have you forgotten something? We can deal with it the way we want to deal with these clients and keep up to date. And then at the end of the quarter, we can press the send button, yeah? So that's basically how it works. Anyway, time to finish now. Thank you very much for attending, and I hope you have found this webinar helpful. Goodbye.